Hey everybody, welcome back to Two Guys Talkin Houses. As you can see today, Mark and I are both wearing our red, and that is for military appreciation. And today's episode is really going to be focused on and centered around the veterans out there, because one of the things that Mark and I both love to do, me as an agent and he as a lender, is to help military families make home happen. So today we're going to talk about various things like tax rates for veterans and disability and how that reduces or even eliminates some of that. We're going to talk about some different loan and home buying programs that are available to veterans out there, and how when you get orders to move from one city to the next, that we can have your family simultaneously put in a home and ready to greet you when you get there, rather than having to stay behind and things like that. So without further ado, let's get right into it. So what to you is the most important thing that, you know, when you get a veteran client that you can make sure that you take care of for them?
Well, the first thing we want to make sure we get them kind of the maximum benefit. There's
Sure.
a lot of different programs out there, but their VA loan that they're eligible for, it's by far the best way to finance a house. There's no mortgage insurance. The rate is generally lower than a conventional loan. It's somewhere around FHA territory. But, if you're buying a $250,000 house, that mortgage insurance might be $150, $160, on a FHA loan, but you don't have it on a VA loan.
Right.
So I think that's an important detail for sure. But I always talk to veterans and say, look, I was never brave enough or smart enough or whatever enough to go into the military when I was that age, and they surely won't take me now. But I really appreciate those who have served our country, because, they've placed themselves in harm's way for our freedoms.
Yeah.
And I think that's important to do whatever we can to recognize.
Yeah, absolutely. And, I love working with veterans. They're some of my favorite clients to work with. And a lot of times what I have found, and I don't know if you've seen the same thing, they are not really versed on what programs are out there for them as far as buying a home. They know the basics, right? They know I can get a VA loan and I can put 0% down. But then when you start talking about mortgage insurance, and I helped a guy recently who was partially disabled, that he didn't realize that he was actually going to receive the benefit of not having to pay property taxes on his home and things of that nature. Can you kind of really get into the specifics of what a VA loan looks like, and what are some of the benefits maybe from, we could go with a veteran who's 100% disabled all the way to somebody who's not suffering a disability, and what they can expect and what the benefits of that loan are?
I sure can, and I will tell you, I worked for a bank at one time, and the chairman of the board just said, like, yeah, you don't need to put a question about if they're a veteran in there. If they're a veteran, they'll tell you. And, well, it's like, no, that's actually not how that works.
Right.
Because a lot of them feel like maybe it's getting more than they deserve for some reason, which is sort of backwards from the way I'm thinking.
Sure.
You got to have everything you do deserve, and we want to help you however we can. And there's kind of a general rule that VA loans have a little more leeway because they're veterans.
Right.
And so we work hard to get those done. But there's some things that are great if you're 100% disabled. And I always have to be careful when I ask that question. Are you at all disabled? And they say yes. And I'm like, oh, great. Well, actually, it's not great, because they're disabled.
Sure.
That's not good. But it is good because it qualifies them for some additional benefits. So a VA loan has a funding fee for veterans, and for the first time use, it's 2.15%. So when you buy a $100,000 house, if you put nothing down, which is another benefit of a VA loan, nothing down, then you're financing $102,150.
Okay.
So and that's just rolled into the loan, right? Now, if you're disabled, you don't pay that.
Okay.
So there's a savings right there. You're financing less. Now, if you're using it again, the next time you use it, it's 3.3% instead. I believe 3.3 is, I always have to remember, because it's changed over the years. So, but the point is that you're saving that if you're a disabled veteran. Second thing that's important, and we're here in Texas, and in Texas we really appreciate our veterans, And one of the great things they do is they eliminate property tax if you're 100% disabled veteran.
Wow.
And so you can
And that can be a lot in Texas. Property taxes
Right.
can be substantial.
It can. I mean, you might qualify for, I don't know, $50,000, $60,000 and more house just because the property taxes aren't part of that payment.
Sure.
And so, that's another benefit. We also look at some programs out there. There's the Texas Veterans Land Board. Well, it gives a half a point discount off the rate for people that are 100% disabled. Now, there's some qualifiers.
Sure.
It's the rate that's on their website, which sometimes is lower than what you can get in the open market. There is more costs involved. There's some fees and such. So I always run the math both ways, right? And if it's going to benefit, I've done Veterans Land Board loans over the years that have been great. I had a guy, I don't know, it was probably 6-7 years back that he bought a $450,000 house, didn't put a dime down. His seller paid his closing costs. And then, his rate was a good half to 3/4 point less than you could get in the market. And that
excellent.
guy still lives there today, and pleased as punch.
Yeah.
So, but yeah, so those are some of the things that we want to look out for.
Right.
There's also some other benefits too. Like a lot of people don't understand, agents, lenders alike, that your seller can pay your closing costs. So we say that, let's say you buy a $100,000 house and you want your seller to pay $5,000 in closing costs. You could offer them $105,000 and they pay $5,000 and then they still end up with $100,000, right?
Right.
Or you could offer $100,000, say I want you to pay $5,000, and they get $95,000 for their house.
And as long as the house appraises, you're okay going a little bit above.
As long as the house appraises, which we usually don't have an issue with. So, that's usually fine. I have one right now where they're getting almost $14,000 in seller contributions.
Wow.
That they can use that money for paying the closing costs, of course, or if needed, they can use some of that money to pay down other debts that they have if they need to get their debt to income ratio down, or if it just makes them more comfortable.
Right.
With the payment. We've definitely had situations where we've paid off consumer debt along with their purchase, rolled all that in, and they actually ended up paying less than they were before.
Sure.
For rent or for the previous house.
Yeah, and I want to stick on that closing costs for a second because I've closed a couple of VA buyers, and they were a bit confused when they saw the net sheet as we got close to closing.
Right.
And you get the estimates early, and then you get the finalized closing disclosure, a day or so before closing. But I, always have to kind of walk them through when they see that they have to bring money to the closing table. They say, "Hey, it's a VA loan. I thought I had to put 0% down." Well, what you pay at closing, your quote unquote down payment, is one part of the money that you bring to closing. You have the closing costs in addition to that. You're prepaying the taxes and insurance and stuff like that. And so, let's talk about seller credits, because the thing that a lot of VA buyers anticipate is that they can literally show up to the closing table without one single dollar and close on a home.
Yeah.
And so a lot of ways that I've helped them creatively do that is, yes, we have the VA loan, which means we're putting 0% down, but here's how we can get all of the other expenses of closing covered, which is to say that you get the seller credits towards the closing. And any client that I have, when it comes time to talk about negotiation, let's say I'm selling a house for $500,000. They say, okay, what should we offer? $490,000, $485,000. And I always say, well, there's a couple ways we can do this. We can go with the straight price reduction. We can go from $500,000 to $485,000 and present that offer. Or we could look at staying at $500,000 and requesting that same $15,000 reduction that you want in the form of seller credits.
Yeah.
And there's some restrictions, and that's kind of what I want you to talk about, the restrictions as far as the different types of loans. And I think VA, you can go up a little higher than you can on conventional. You can correct me if I'm wrong, but basically you can save yourself $15,000 at the closing table, and the monthly payment between a $485,000 house and a $500,000 house, as far as the mortgage is concerned, is not all that much. So for a lot of buyers who don't have an endless supply of liquid cash to bring to the closing table, the reduction or the concessions rather from the seller is something that's really attractive to them, and they didn't even know that you could negotiate in that way. And that's why I think as an agent it's really important to understand negotiation and understand the different things that you can push for your clients, rather than just a simple, oh, it's listed for 500, let's offer 490 and see what happens, but there's a lot of creative ways that you can get this done. So can you talk a little bit about what the maximum amount that a seller can contribute to a veteran buyer is, and then how that money then gets applied at the closing table?
Sure. So if we start with like a conventional loan limits your seller contribution to 3% of your sales price.
Right.
Unless you put more down, we can talk about that some other time. But FHA, it's 6% of your sales price.
Right.
Everybody thinks that VA is 4%, and that's not actually true. The guideline reads that you can do usual and customary charges plus 4%.
Okay.
So, usual and customary charges is usually closing costs. The closing cost portion of the closing costs is about $4,500, with first survey and an appraisal and title fees and all that. That's what we generally tell people. And that doesn't matter if it's a VA or an FHA or whatever. There is a rule where we can actually charge VA buyers more, a percentage of your loan amount or your percentage of your purchase price, but we don't do that. It just doesn't make sense.
Right.
So that $4,500 or so can be paid for by the seller plus an additional 4%. That can be used for your first year insurance, your escrow setup, 3 months of taxes, 3 months of insurance.
Yeah.
And then if you need to pay, I don't know, a car loan off or credit cards, or one of the phenomena we've seen after COVID is the consumer debt is at a level it's never been before.
Yeah.
I mean, it's $5 trillion. And so, we see a lot of people paying off credit cards, car loans, installment loans that they got at maybe a loan place or through their bank, consolidation loans. And we can pay that off just maybe because they want to pay it off, or maybe because it helps them qualify.
Right.
If their debt to income ratio is high, that's one way we can solve that problem.
Sure.
And truly the down payment is 0. Right.
Right.
And but as you and I both know, in a real estate transaction, if you go to your seller and you say, "Hey, I want to buy your house. I'm going to give you $0 in a deposit, and you're going to hold it off the market for me."
Right.
It's probably not going to go well.
That's exactly right. So
you have to put down. I always talk like it's a deposit on a car that's on the side of the road.
Right.
Tell the guy, "Here's $500. I'm going to go get the rest of the money. You hold the car for me and apply that $500 to the sales price
of
the car." Same thing on real estate transactions. You put down your earnest money. If it's $2,000, you can actually on a VA loan get all $2,000 back at the closing.
Right.
So if you work it out, so your seller pays all your closing costs, you got 0 down, you're getting a check back for your earnest money. And so a lot, truly you had 0 out of pocket. It is certainly possible. You can do that.
Yeah.
But a lot of veterans, you're right, don't always know that. They hear 0 down thinking it's 0 at closing, and that's 2 different things.
Exactly. Yeah. And walking, VA veteran buyers through that is a very helpful thing. And that's why I think it's really important to work with somebody specifically who understands the world of VA loans and how to navigate veteran buyers, which is why, we level up ourselves as agents by coming to events like the one that y'all are putting on this week, where it's a continuing education class. We get credit as a real estate agent towards our relicensing every 2 years. And, we learned something really important, which is how to help a group of our population here in the United States that I think really deserves to have home ownership, know, and the amount of veterans that you see, unfortunately, that are not just, not owning homes, but actually homeless, I think is a tragedy in this country. And that's a topic for a different day. But if we can help them get to the point where they can reasonably understand the process and then get into a home, for me, that's, one of the top reasons and things that I enjoy doing in this industry is helping that veteran client get into their home and helping them understand the process. So thank y'all for putting that on.
Yeah.
But, speaking about what specifically veterans may encounter that's challenging as they go through the process. So we know that they have to put 0% down. Mm-hmm. We identified that there's still some closing costs because you have to pay title, you have to escrow the taxes and insurance and stuff like that. but you can get that in the form of seller credits.
Right.
You hear that the appraisals on VA loans are more expensive than a traditional appraisal. You hear sometimes that the VA is picky about the particular home that the client is buying and stuff like that. What are some challenges that you've run into with veteran buyers? And another one that I want you to speak on too is veterans thinking that they can use the VA benefits to purchase investment properties that they're not going to live in. So sometimes that's a hard conversation to have because that's not necessarily what the program was intended for. So talk about some of the challenges and then talk about what are the regulations for the VA loan.
So, a VA appraisal is ordered through the VA portal.
Okay.
So now if you take a conventional or FHA appraisal, because they call it the Home Valuation Code of Conduct, says that we can't have direct contact as a lender with the appraiser. It has to be random. That appraiser has to be randomly selected. Now it can be, like we have a preferred panel. Like we've known these guys for 10, 20 years. We know they do a good job. And so if we're doing a conventional or an FHA, it goes through an appraisal management company who randomly selects from that list. VA is different. VA, you have to order through the VA portal, and it gets assigned to any VA appraiser in the area.
Okay.
So that can be challenging, but we haven't seen, these guys are not just VA appraisers, they also do FHA and conventional.
Right.
Like they're legit appraisers. It's very rare that you find one that just throws out a bogus appraisal. In the time I've been doing this, a couple of decades, I've seen it happen a couple of times.
Yeah.
But for the most part, they know what they're doing and you're good. They are looking for other things though. They're looking for, I always say it's like things your dad would point out.
Yeah.
If your dad came to the house and he saw like a whole bunch of termite damage on the side of the house, he'd be like, hey, wait a second, you got to fix that. Or, if he looks at the yard and the entire yard is sloped towards the house, so the water's going to drain towards the house, probably going to mention that.
Dads love pointing out cracks in the wall for foundation issues.
Exactly. Foundation issues, things like that. Those are things that we want to make sure are taken care of before our veteran buys it.
Right.
And the same thing goes with FHA. FHA wants to fix those things so that when that buyer buys that house, they're not faced with a whole bunch of other expenses they didn't know about.
Right.
And so yeah, they are a little more strict than a conventional loan appraisal. They're not really that much more strict than a FHA.
Okay.
It's pretty much the same stuff, and you always have to get a termite inspection on a VA loan anyway.
Right.
So that helps at least knock that part out. But rotting wood on the side of the house, maybe they don't have smoke detectors or, simple things like that. Those are things that they're gonna point out. Yeah. And so, that's a challenge, but it's not typically one we see be a problem.
Yeah.
VA loans used to be a lot harder back in the day.
Is that right?
And because there was a separate VA inspection that wasn't part of the appraisal. And so they've made it so much easier now that, but some of the older agents still remember those days.
Yeah.
And so often when we're making an offer, it pays for me as a lender to call that listing agent and say, hey, I know this is VA, but let me explain a couple of, first of all, they're well qualified, great people, they served our country, blah, blah, blah. And if they start to object, often I'll say, look, I know they're not putting anything down, but they left their down payment on the battlefield. So, that's kind of how that goes. And very few of them have argued with me at that point.
Yeah, it's kind of hard to be the agent that argues with that.
Yeah. Like, I don't care they served our country. It doesn't happen, so that's very good. And so those are some of the challenges. And you also had a follow-up question was?
Purchasing homes for investment purposes with the VA loan and, having that difficult conversation with the veteran that's not necessarily what the program was intended for, and how you've navigated that with certain clients.
So that is a challenge. We have had that question come up. Father wants to buy a house for his son to live in, or something like that. The VA program was developed for veterans. That fee that you pay, the 2.15 or 2.15 or the 3.3, that finance and that funding fee is meant to cover foreclosures that happen with veterans.
Right.
Foreclosures are more likely to happen on investment properties than on your primary residence.
Right.
And so for that reason and many others, no, you cannot buy a non-owner occupied property on a VA loan. You also cannot have somebody who's not a veteran on the loan with you unless you're married to them. So, so Mr. Service Member and Mrs. Service Member can be on the loan. Mr. Service Member and his buddy down the street, not so much if they weren't a veteran. We have had some exceptions. We've had, a father or a son caring for his father, elderly father. Elderly father was buying the house down the street. They're both veterans. And so we were able to get an exception, like, okay, we can put both of them on the loan. Dad is the primary, son is the cosigner. That's okay. Both veterans, and it made sense. The VA was like, okay, yeah, we can do that.
Yeah.
Otherwise, if you have somebody who's a non-veteran, then you have to put 12.5% down.
Sure.
And the reason that is because VA loans cover 25% of the balance if there's ever a foreclosure.
Okay.
So so if you cut that in half, that's 12.5%.
25%, yeah.
Exactly. Now, we can't rule out investment properties entirely because there is a way that I currently have a guy who has 3 homes, all on VA loans.
Okay.
2 of them are investment properties. Now, how he did that was he bought one, 2010 or 12 or somewhere in there. He bought his first property on his VA loan. And then a few years later, he came back and he said, hey, you know what, Mark, I want to buy an investment. I want to buy a bigger house, but I want to rent this one out. Is that okay? Sure. He had remaining entitlement to cover that. So
right. House
number 2, he now moves out of house number 1, rents it out. It's still on a VA loan, and he buys house number 2 on a VA loan, nothing down. A few years later, he comes to me, say, I want to buy this house. And I had a conversation. I said, you know what, man, you don't have quite enough entitlement. You are going to have to put something down. But you're not going to have to put it down as much as you normally would.
Right.
So in this guy's case, it was $400,000 house. I think he had to put $12,000 down. His only other option.
Across 3 houses, that's not too bad.
Yeah, you're right, exactly. And so 5% is $20,000 on a $400,000 home. So that was a better option. 5% with a conventional was really his only other option at that point.
Sure.
So and so that can be done that way, and people do. And there's a new law out there for VA that there's no limit on the loan as long as you have the whole entitlement. Either you've never bought a house on a VA loan, or you've sold the house that you have and had a VA loan and your entitlement is restored. You can buy $1 million house, $2 million house with nothing down.
Wow.
You're just paying the closing costs.
Let's talk about the entitlement a little bit.
Sure.
What is the total amount of entitlement? I guess explain also a little bit what the entitlement is,
right?
How that works, and how you get that credit back if you were to sell a house.
So generally, that entitlement is paid when you pay off the VA loan. They request that the entitlement's restored. If they don't do that, and I have seen lenders forget to do that, then the veteran can request a one-time restoration.
Okay.
Meaning the name of it is exactly right, one time.
Okay.
They can't do it again if somebody else screws up down the road. But some of the guidelines for entitlement vary: when you served, what type of service, how long you served, all of those play into it. But in general, honorable discharge out of the military or actively serving over, then they're going to have an entitlement of 140. I don't remember off the top of my head. It's 25% of the conforming loan limit is basically what it boils down to. So next year that's going to be $800,000.
Okay.
So if you take 25% of $800,000, $200,000 is what it's going to cover basically in mortgage insurance. So if we put skin and bones on that, let's say that they buy an $800,000 house and they default on that house. As long as the lender sells it for more than $600,000, they're okay. Okay. Because that's, again, 75% of $800,000. So that's how that works. Now, let's say you had a foreclosure way back in the day. I ran across one from 1972 a while back.
Wow.
And he had a foreclosure. Well, the original loan amount was, $38,000 or something like that. Right? So that entitlement was charged for the $38,000. And there's a formula that we use, and I always have to look it up. It's one of those things that just I've resolved, like, I'm not going to remember all those numbers and where they go and how that works. I'm just going to look it up because it's easy. But we recalculate that. Okay, well, how much remaining entitlement does he have? Does he have enough to buy? And sure enough, in that situation, the answer was yes. Right. It was only charged the $38,000. So he had a whole bunch of entitlement left over that he could, use.
If you're going to have a foreclosure, better to have it in 1972 when the houses were $38,000.
Right. You could buy something. But so let's talk just for a minute about this event thing.
Yeah.
Because it's important. So, our group was with, and at one time there were 55 of us. I think we have more now. But our group was part of another company that put on this event every year. It was American Warrior Initiative event. And it was a great company, just times change, and it was a better fit somewhere else. And so this is the first year we've done the event on our own.
Nice.
Of our own. And we wrote the class. It's now continuing education credit. But it focuses on when if you're in the military, active duty, and you get orders to move, right? So say you have to be there by, I don't know, January 12th. Whatever it is. So our job as a lender and a real estate agent is to help them find a house by then and close on that house by then, so that the family is there when the active service member is there too.
Right.
So if you have to be there the 12th and your loan isn't closing on time because of whatever, that's a big deal.
He or she, the military service member, has to be there on the 12th, regardless of the home closing. Exactly.
It's like, no, my lender delayed, or whatever. The seller's not available. None of that stuff really applies. They don't. The Army doesn't care.
Right. Yeah.
Or whichever branch of the military. They're like, nope, you have to be here. And so part of our job is to ensure that process goes as easily and smoothly as possible, which is a lot about what this class is about.
Sure.
Tomorrow. Now we're going to cover other things on VA loans. We're going to cover how we serve veterans. How do we make their life easier, and how do we recognize the service that they've provided,
right?
To their country, and how do we? There's really no way we could thank them for everything they've done, right?
Right.
But if we can do just a little bit or do our part, then I think that's important, And so the shirts, and this is something that I was in the Garrison Brothers distillery, and they do this too. Okay. They have Red Shirt Friday, and it's remember every deployed, or remember every defender, depending on how you look at it. But you wear red shirts on Friday. That's the basic concept to support the military. And it's amazing how that has spread across the country. I don't think we started it. Somebody started
Somebody
it.
did, yeah.
But but I think it's a good way to recognize, like, hey, we really do appreciate you for everything you did.
Absolutely.
Yeah.
And I want to ask you one more thing with regards to the VA loans. And probably this will be covered in the event that I'm really looking forward to. Spouses of fallen service members killed in action can a lot of times, I believe, they're somewhat not, I don't want to use the word uneducated, but not quite sure what they're entitled to as far as purchasing a home to take their kids or whoever and try to continue on as best they can with their life. What can the spouse of a fallen military member get with regards to the VA programs?
Well, and let's touch on the educated part for just a second. Nobody teaches this stuff in high school.
Right.
Or college.
They should.
And the military doesn't have a class like, hey, here's your VA benefits after you discharge. It's kind of like, okay, you don't owe us any money, you returned all our stuff, bye, go forth and prosper.
Exactly. Yeah.
And so, but you're absolutely right that's part of why we do this podcast in the first place.
Yeah.
Right? Is so that we can kind of educate the public on things people don't know, including that the spouse of a veteran. You notice I didn't say disabled.
Right.
But the spouse of a deceased veteran can get a VA loan with the same benefits, just like the veteran.
Okay. Yeah.
And which is an important change they made here recently in the last couple of years.
Yes.
And I think it's fantastic because they were left out. Now, if you had a VA loan on your house and you went to refinance, and maybe you were divorced from, my wife was divorced from her husband, who was the veteran. And when she refinanced her house, there's a way to do that.
Okay.
But there wasn't really a way, unless you had a disabled veteran that passed away, then there wasn't a way for that wife to buy another house.
Gotcha.
So, and now they've allowed that to be disabled, not disabled, doesn't matter. she can buy a house
Sure.
on the VA and enjoy the same benefits as, because I mean, if you think about it, she was there often when he was serving as well, or vice versa. Sometimes it's it's the wife that served and the
Right.
husband's the surviving spouse.
Yeah, and I mean they don't go through it on the battlefield per se, but they go through it, emotionally, when your husband or wife is deployed for however long, and
Months or
months
years
or
or
years.
whatever.
Yeah, I used to know, growing up in Savannah, some of the guys in the Army, Hunter Army Airfield and Fort Stewart that were there. They would get 18-month deployments. They would have kids that were born while they were gone, and the kids already celebrated their first birthday by the time they get back. So
Yeah.
I think it's a wonderful thing that we have these programs to help veterans, but I think it's really important too that, if you are a veteran, you explore what's available to you and you do it with a professional. And that's, like you said, why we do this podcast. I'm a licensed realtor in the state of Texas. You're a licensed loan officer in the state of Texas.
Right.
And you kind of need both in order to, really fully understand what your benefits are, what programs are available to you, how you can realistically get into a house. Because, you have that example of the fallen veteran whose wife has got 2 kids, and she's the furthest thing from her mind is, I can actually afford buy a house and move into a comfortable place with my kids. A lot of times they think there may be 100 steps between where they are and home ownership. And if you have a couple of professionals in your corner, they can actually show you the way, and they can show you that it's more possible than you may have thought. So obviously for those of you out there, veterans, we love to help you. Y'all are some of my favorite clients. I'm in Texas. I'm in the Houston area. If you're looking for a house here, please give me a call. Mark as well. He does loans, I guess, throughout the entire state of Texas.
Sure.
So
Sure.
Yeah, reach out to us. There's always a link in the description of these videos. There's going to be QR codes in the banner. So don't hesitate. Even if you're not looking to buy right now, if you just have questions, we're always here and happy to answer them. So, Mark, did you have anything else before we wrap? Or?
One last thing I want to add. Make sure if you have a lender, of course, I'd love it to be me, of course,
Yeah.
right? But whoever your lender is, ask them if the VA loan makes sense. So I've had people putting 10%, 15% down, and the VA loan still is their best deal. I've had people put 20% down, and it's still their best deal. So, it's something important to have someone run the numbers, take the time to run the numbers so that you have the maximum benefit.
Yes.
And if VA loan is the way to go, then absolutely, let's do that.
Are there rare occasions where the VA loan is not the best for a veteran, or is it pretty common that it's always the best
It's
option?
almost always the best. I mean, there's really, I can't really think of another situation where it wasn't, because again, with no mortgage insurance, that eliminates a huge part of and especially if they're 100% disabled. Now, if they're 90 or 80%, they get a discount.
Right.
It's embarrassingly small, but at 100%, they have no property taxes.
Yeah.
And so, and a lot of the national lenders don't underwrite with that. Like, they don't recognize that it's there's no tax on a 100% disabled veteran.
Yeah, and that's super important because that changes the game as far as what the veteran can actually afford, and what price points you're looking at and stuff like that.
Yeah, absolutely.
Cool. Well, guys, thank you so much for watching this episode of Two Guys Talkin Houses. I'm Stephen Barnhill with eXp Realty, the Bly team here in the greater Houston area. And then, Mark, if you want to let them know how to get in touch with you.
Absolutely. I'm Marc Elliot with NRL Mortgage, also here in Houston. You can always find me at markdoesloans.com. And my contact information is there, or scan the QR code in the banner.
Thanks, guys. And thank you to all you service members out there. We would love to help you. We'll see you in the next one.